We have a lot to be thankful for this holiday season. You have your job, your kids, that girl who wears the tightest yoga pants at the gym. But perhaps most importantly, we have our dividend checks. Money companies send us every single month for just being a shareholder. Why wait in line for Costco gas when I can just get Costco dividends? Don't like retail? Well, we can invest in pharmaceutical companies like Johnson & Johnson, soda companies like Coca-Cola and Pepsi, tech companies like Microsoft. All these are companies that return a portion of their profits that they earn every single quarter to the shareholders. Accumulate enough of these shares and the dividend payments can become bigger and bigger, and they could eventually replace your full-time job. That's the goal of dividend growth investing, and every month I share the dividend payments I receive on my journey with my six-figure stock portfolio. As we approach the end of the year, I'm sure many of your jobs are starting to do annual reviews. You know those reviews where the company announces record profits, but for some reason can't give you a pay raise? Yeah, those reviews. Luckily, we have plenty of dividend companies that gave us a pay raise in the past month for being the good shareholders that we are. This includes popular companies like Lockheed Martin raising their dividend a whole 7% to $3 a quarter. If you like the New York Knicks, which I don't know why you would because they're perennial losers, their owners, the Madison Square Garden Sports Corp, announced a one-time special cash dividend of $7 a share. This is going to be the one and only time it pays to be a Knicks fan. You're gonna be loving McDonald's because the Golden Arches just gave a 10% pay hike. And they continue to impress as they're actually up year to date despite how poorly the stock market has performed this year. It just proves how recession-proof those sausage McMuffins really are. How about Penske Automotive Group raising their dividend 8%? This is one of the lesser known, smaller dividend companies that's returned 330% in capital appreciation while paying dividends in the past 10 years. We also have Visa with a 20% pay raise this year. Expect more of these in the future as the company has just a 21% payout ratio and a 5-year dividend growth rate of 18%. I like the direction this company is going in. ExxonMobil was once the most valuable company in the world, and even to this day, they are still reaching all-time new highs, up 80% year to date. And they just raised their dividend another 3.5%. And they say that dividend companies can't experience ridiculous capital appreciation. Alright, now for the reason you actually clicked on this video, to see how much in dividends I was paid in the month of October 2022. So we're gonna start off here with JEPI, ticker symbol JEPI, and they paid me $16.04. This is a covered call income ETF. They pay out dividends every single month, so you never know exactly how much you're gonna get. I always have a feeling it's gonna be pretty fat. So after JEPI, we have Vici Properties paying me $17.77. Vici owns a lot of the real estate associated with hotels and casinos of the MGM brand, so they're heavily located in Las Vegas, but they're also around in many other metro areas across the US. After Vici, we have Chubb, an insurance company, paying me $2.49. The next company to pay me dividends this past month was Medical Properties Trust, paying me $33.61. MPW has been hit really hard this past year. In fact, you can still get this REIT with a starting yield of somewhere in the ballpark of 9%. It's ridiculous how much the stock has fell. But they recently just had earnings, and it was a pretty good earnings report. I've been buying a little bit more shares, so expect to get even more money come next quarter. After MPW, we had Medtronic paying me $9.61. This is another company I've recently been buying more shares of. They didn't have the best of earnings report recently, but I just had to nibble on more shares. They're at new 52-week lows. They have a really high starting dividend yield. For what this company historically trades at, they are a dividend aristocrat, so just had to swoop in and get some shares while they were cheap. After Medtronic, we have Realty Income, not Reality, and they paid me $7.87 this past month. So you can see back in October, O was at just $57 a share. High quality companies like O don't remain cheap for very long, so I definitely swooped in, put a couple $100 more into Realty Income. So next month, I already know this monthly payer will be giving me at least $10 in dividends. After, realty income, not reality, we have Store Capital paying me $22.96. Fortunately, I think this is the farewell dividend from Store. They are becoming a private company. You don't get too many high quality companies like Store in the stock market, so I'm very disappointed that they're gonna be private and I'm gonna have to reallocate this capital elsewhere, but it's nice to get one last dividend payment from Store. The next company to pay me was Newsy, another income ETF paying me $5. Now this is a position I've been slowly exiting out of. I've now actually completely gotten out of this position. It just didn't make sense in my portfolio. I just reallocated that money toward other income ETFs. After Newsy, we have the company that was formerly known as NRZ. They paid me $3.29. After this company, we have the Triple Qs paying me $10.52. The Triple Qs heavily invested in the NASDAQ 100, and they pay a very small dividend yield as well. After the Triple Qs, we have JP Morgan Chase paying me $23.08. I use Chase for my savings and checkings accounts, so I don't get any interest there, so just investing in Chase Bank, that definitely pays more than just leaving your money in your bank account. After Chase, we have SPY, the S&P 500 ETF. Now, I owned well over $5,000 worth of SPY earlier this summer, and then I unfortunately had some troubles with my car. The engine just totally gave out, so I unfortunately had to buy a new car. Yeah, thanks Chevy for having your cars break down at 49,000 miles. So yeah, I went with the Honda Civic, and I heard those are super reliable, so I'm going to be driving that for the foreseeable future. And my leftover money with SPY gave me a whole 21 cents in dividends this past month. After SPY, we had the old reliable Q Yield paying me $17.07, another income ETF. I love these monthly payers. I also had X Yield pay me $3.78 and Divo pay me 86 cents in my IRA. Now that's the first of many dividend payments I'll receive from Divo, which is another monthly dividend ETF. I also got about $22 in interest payments from Fidelity from my uninvested cash. While this is passive income, I won't count it toward my dividend total because it's not a true dividend disbursement. Check out the video I just made on Fidelity's very high yielding money market funds for more info. Altogether, I had 15 companies / ETFs pay me for a grand total of $174.16. Now that's a 61% increase from last October when I made just $108. This is actually the second straight year I had a 61% increase year over year, because in October of 2020, I made just $67. Now my monthly average, this is the amount of money that I make in dividends every month, is now at $189.42 in passive income, money I did not need to work for. And quarterly, this money is now at $568.25. Now you might notice this actually went down from last month, and that's because I had done some reshuffling since the last time this tranche had paid, which was in July. For example, I mentioned earlier that I had to sell a lot of my SPY position to buy a new car. I also sold out of Newsy. And also, anytime you have ETFs, those distributions are likely going to be fluctuating each distribution. It's not like a typical company that pays out the same amount each quarter. So nothing is really concerning me there. I already know this tranche will go up in January when it pays again. So as tempting as it is to compare quarter over quarter, I think looking at year over year, it gives a better picture on how fast your portfolio is growing. While I still might be making more money going to the bathroom at work, I know every month the more I save diligently and invest and have my money work for me, the quicker I can reach financial freedom. Now, whether that means quitting your 9 to 5 and spending the day at the beach, or working as a Starbucks barista, financial independence means you are empowered to set your own hours and schedule without money being a problem. Now, I'd love to hear what companies paid you the most this past month in the comments below. Please help out a small-time YouTuber by hitting that like button, and remember to check out my videos in podcast form under the Collect Cash podcast name. You can become a podcast subscriber and help support the channel and listen ad-free for just 99 cents a month. As always, I will buy, stash, and collect cash you on the next one.